Despite all this continued tariff uncertainty, the S&P is coming off a 5-day win streak. That's the longest since last year. Here to help us break down some of the impact for global investors is Charles Dallara, former Institute of International Finance CEO and Partners Group USA chairman of the board, joins us now. Charles, great to have you back. Welcome.
Good to be back with you this morning, despite the continued market jitters.
Yes, we keep posing questions about those jitters to corporates on our air. It varies in their response. The airlines have been pretty downbeat, although the Coke CEO just a moment ago, not as much. What's your view on what the uncertainty is doing to recession risk?
Well, it's increasing it. There's no doubt about it. I think I admire Secretary Bessent's efforts this morning to tamp down the perception of uncertainty. But let's face it, it's still there. We do not know what will happen after the 90-day pause on the tariffs around the world. We continue to see the disorder that's created by this across-the-board 10% tariff implementation. But the big issue here really now is not just revolving around the negotiations with Japan and Korea, although it's welcome that those negotiations are proceeding. But the big issue is this two-way tsunami across the Pacific, which the U.S. and China have created, which are going to have a massive impact not only on the U.S. and Chinese economies, but also on the global economy. And it clearly will put additional round of pressure on prices. It clearly will create supply disruptions. And, you know, the dependency the U.S. has developed over the years to Chinese products is massive. 75% on consumer electronics, 75 to 80% on toys, 95% on some other basic products like metal office furniture. This is not going to be replaced quickly or easily. There will be a price effect and there's going to be a supply effect. So I'm afraid that the uncertainty will translate into some painful elements of certainty before too long if solutions aren't found and these massive tariffs are withdrawn.
Right. The clock is ticking, as J.P. Morgan wrote last night. Meantime, Charles, there are some stories on the wires today about Chinese diplomats fanning out around the world, trying to paint the U.S. as an unreliable partner. Mark Carney, in his victory statement last night, we are over the shock of the American betrayal, but we should never forget the lessons. How many doors are opening for other countries to assume some sort of global leadership role?
Well, we are opening doors. I think this is an unfortunate and largely unintended consequence of what's happening in our trade policy. Look, I think we have to roll back the clock a bit here to recognize that 5 different presidents over the last 25 years have tried to get a handle on these growing imbalances between the U.S. and China. And no one really has succeeded. So I appreciate the fact that President Trump is out of patience and wants things to change. But I'm not at all sure this is the productive way to do it. And we are creating a bit of a vacuum among our allies. And although I don't blame Mark Carney for saying what he's saying, I think it's really premature to jump to the conclusion that the world of open trade and the world of partnership with the U.S. is a bygone era. I think that despite the damage that has been done, the goals here are not unreasonable. It's just that I think they cannot not be pursued just through tariffs alone. There needs to be a broader macroeconomic set of negotiations between the key countries. We need a new G7. We need to create a new G8, which involves countries like the U.S., Europe, China, India, Japan, the UK, probably Korea, probably Canada. There needs to be a new framework for addressing these persistent imbalances, which are, after all, not just trade problems, but they have to do with surpluses and deficits on the services accounts, as well as the role of the exchange rate. You know, there's been very little discussion in the last months about dealing with exchange rate issues here. But in 1985, when I was working for Secretary James Baker at the Treasury Department, we had to recognize that if you're going to tackle imbalances, you've got to tackle exchange rates as well.
Right. Charles, I wish we had a little more time, but it's got some breaking news today. It's good to see you again. Thanks for helping out.
Good to see you as well. Thanks.